Hello, everyone. Welcome to the 39th episode of Punch Card Investing. Can you believe it's been that long? I say this every week, but it's pretty crazy. Every week it goes by, we had another to our count. We're almost at 40 weeks of this. It's crazy. Not quite at a year yet, but we'll be there pretty soon. But man, this week has felt like a year with the amount of stock earnings news we've seen that have moved some really big players up or down. Hundreds of billions of dollars in some cases in market cap terms. Just crazy movement in the market now in what's already been a volatile month. So we'll definitely be hitting some of those crazy earnings moves. Not always. It seems largely decoupled from what the earnings actually were showing in some cases, but I'm getting ahead of myself. We'll get to it. It's been crazy to say the least. So we'll be going through some of the highlights. But before we do that, let's welcome two special guests here, Jason and CJ, filling in for our friends down under who are not in for this episode. Frank and Tom are out, but CJ and Jason are in. Jason, a regular. CJ, it's been a while since you've been on, so thanks for stepping in. And this should be a lot of fun. We got 4 Americans this time around. Karan, our lone non-American. so that this will be interesting. Yeah. And before I forget, please be sure to smash that like button, subscribe, all that good stuff. I don't even know where to start, guys. Where do we start? Do we want to just pick a stock and go with it? Because it seems like you could just throw a dart at a dartboard, you land on a stock that's moved $50 to $100 billion in market cap in the last 2 days. So where should we start?
I think let's start with the super investor SIP. Jason?
Oh yeah, good call. Jason?
Okay, sure. Yeah. I think it's especially needed this week for those of you who don't know what this is. This is the super investor SIP. If you do it, everyone who's done it has become a super investor, and it's made me a better investor than everyone who's done it. So we invite you to join us. So grab your favorite drink. Mine is coffee. Tonight I have a Powerade Zero Sugar, 0 calories, because I'm trying to cut down. And grab your favorite drinks. And let's remember the 3 things that Ben Graham taught us. Number 1, a stock is not just a piece of paper or a news story or a meme or a tweet or whatever. It's an actual ownership of a real business. Number 2, Mr. Market is there to serve us like he has been this week. And number 3, always invest with a margin of safety. A lot of people forgot about that one, and that is becoming evident now. So screw them and take your super investor sip.
Hurrah. Oh, wonderful. Oh, and Jason, I was mentioning, you were mentioning cutting down. I noticed you cut off quite a bit of that beard, and we're left with this beautiful mustache. So that is fantastic.
Yeah. Like the inverse.
I feel like I got 2 years back. Yeah, all we need is Frank now to do it too.
Frank's mustache would be otherworldly. Probably stretch out to
Jack.
here.
Before we get into individual stocks, can I just make a comment on the overall market? I've had more fun being a stock market investor this past week than I have in years. There's something lackadaisical and boring about the stock market just going up 13.5% every single year and everybody winning and profits not mattering and all that kind of stuff. So it's been refreshing and really, really fun to see the market change on a lot of companies. And I feel like this is what it's all about. And I love the volatility. So I don't know if you guys have been enjoying the week as well.
Jason, are you just glad that everyone else is feeling the pain that you did with Baba? Like, everyone else is catching up to that.
With Alibaba?
Yeah, like the 1 year that we've been losing.
Well,
everyone's losing.
I mean, it doesn't feel the same, honestly, because with Alibaba, I'm out of it now. I might get back in. It doesn't feel like a loss. It feels like the market is providing an opportunity. And I have very, very, very little doubt, almost no doubt, that unless the regulators do something to shareholders and all that kind of stuff, I maybe say those odds are 10%. Unless that happens, I think Alibaba is going to be worth a whole lot more down the road in a few years. And some of the companies that have taken some L's this week doesn't feel like that. It feels like a lot of people are waking up to reality. So it's felt like a totally different thing. But that said, I'm glad it hasn't been the names in my portfolio. That makes it a whole lot easier to digest.
Well, not everything. You did say it was volatility. It's not as though everything's going down because, I mean, we saw some big moves up this week too. I mean, Snapchat
Yeah.
today is up like 60% or something ludicrous. Is it still at 60%? I know it dropped down to
Well,
like
yeah, it was
40.
59% on the day, but you know what? I had seen that. Guess what it is over the last 12 months? Down 39%.
Mm-hmm.
So they're not out of the woods yet either.
They're pulling some serious G's right there.
Yeah.
Huge, crazy.
Where are you
Yeah,
guys
I
loving
don't
this?
know.
Are you
Almost
scared?
50%
Are you
on
worried about your holdings?
I'm not scared because I think all of us are on the same page in that we're investing for the long term. So, and I think a lot of us are in buy mode. We're not trying to retire in the next 2 years or something like that.
Yeah.
So we're looking to add to our portfolios more than subtract. So I think whenever a stock can come down from where you think its intrinsic value is, it's going to be a good thing as long as you're in buy now mode. If not, I don't think it's any of us here. Then yeah, it's probably not too fun. But otherwise, yeah, if stock goes down in the short term, it's usually a decent thing for someone looking to add, as long as you're not over leveraged, of course.
Yeah.
I wonder if Warren is also in buy mode still. He's got a huge cash pile and still no moves from Berkshire Hathaway
That we know about.
that we know about.
Yeah.
Yeah,
was
Frank
just
had
thinking-
some strong words for you here, Jason. You want to pop that up here, Jack, real quick?
Oh my goodness! Yeah, I was just reading that. I thought it was
Yeah.
yeah.
That's
Frank
kind of
is,
scary. I don't know what this is.
Frank's a little prideful, I guess.
I wouldn't have let that super. You
he
are all
doesn't
sheep.
like that we invited. It's funny because we invited Jason to.
Yeah, Frank.
to
I'm
do the
not
Super
trying to
Investor
take over.
Sip.
I'm not trying to take
No.
over the show. I'm not trying to do my
He
sip on the
is
show.
our-
I get invited. I'm here. You're not. I
He
know
is our
you're welcome to
guest.
come on your own show every week, but you don't seem to be here that often. Maybe busy writing newsletters or something, not contributing to the group here.
Yeah, Frank's
But
an
keep
author
taking
now.
shots at the guy with the microphone. Okay, it's a lot easier to come at you when you got the microphone than when you're just typing away on the keyboard. I know that from experience. So, hey Frank, how's it going?
I have no comment on that.
No.
So Jack, I think there's a lot of beef. So it's the time, for smoking meats. That's why we've got the background.
Oh, I don't know if we can see if y'all can see our background, but
Can you pull it out of the way, Jack? Can you pull us out or no?
I don't know if it'll work well here. Let's try. Maybe if I do. No, that won't do it.
Oh, wait, it's not.
Oh yeah, all
There's
you
a
gotta do
little
is
preview.
minimize that.
Oh, no.
And yeah, you can't see him. Oh no, Grun, you're in the way.
You all know what's going on
How
now.
do I disappear?
Okay.
It's
I feel like I'm protecting everyone from something worse.
it's a particular CEO with a particular amount of sunscreen on his face, and it's a famous picture. If anything lags, you'll be able to see him later. But why don't we get into some Facebook news, because they seem to be one of the main dominoes here. I don't know who started this.
Facebook anymore.
Say again, Brad.
We don't call it Facebook anymore.
Oh, yeah, excuse me, Meta platforms. Let's they took a nice tumble the other day.
Oof.
To the year-to-date view, so it looks more extreme. But they lost something like $220-ish billion in market cap in one trading session, which is just crazy.
Yep.
For a company that was, I think they were at about 900 million or so before that happened. So right now trading at 645 billion. Am I saying millions? $1 billion in market cap.
And it sounds like that was mostly on weak guidance. Am I getting that right?
Yeah, and they their user they actually lost a slight amount of users. Revenues were still up. So I find it funny when people say, "Oh, they had a historically bad quarter." It's like, no, they're still having a historically great quarter. It's just the future is not as great as some people might have thought. That seems to be the case. They spent something like $10 billion over the last year on the metaverse stuff, which they said they were going to be doing. So they did that. And I guess because it's not turning profits now, if it ever does, people are upset about that. It's funny trying to figure out like why the market is doing something, because sometimes it just doesn't make sense. This is a huge move down. So yeah, sure, maybe one or two or three of those factors add up to some of it, but a lot of it just seems like fear in general. But I don't know. It's hard to put a finger on what exactly is going on with moves this huge.
Yeah, I think it was one of their biggest cash flow quarters.
Yeah,
in a while at least.
Let me pull up the quarterly view. Let's see what we got here.
One of the interesting things that Facebook did this most recent quarter that isn't being talked about too much is they bought back a lot of shares.
Yeah, so revenue's
somewhere above $300
Yeah.
per share.
Revenue's over 34 billion in the last quarter, and compared to the previous year. It's $5 billion higher. Cash flow statement. Go to cash from operations minus capex. And yeah, everything's still up except for that user count, which is kind of like one of those top line metrics that people like to pay attention to. And it's important, don't get me wrong.
How much did the user count drop?
Barely anything at all. They're at,
Okay.
what was it, like 2.9 billion users or something?
I think it
ridiculous.
was in the North America, their most valuable market. I think it went down from like 186 million to 185 million. Or
That's what it was?
Like that.
Yeah. But so minute in the grand scheme of things when they got like 3 billion users between all the platforms or something like that. I might be getting the numbers slightly off. We're talking about huge numbers here.
Do they parse that out between Facebook and Instagram, or is it just all mashed together?
I read this week they don't give a lot of information about their subsidiaries at all.
Okay.
They do a family count, which includes all of Instagram and everything, but I'm not sure if they separate it out per business.
Yeah.
So you guys don't sound as bearish as the market is, if I'm hearing you right. Is that correct?
I'm definitely not bearish on Facebook. It doesn't mean I'm going to be taking a big swing at these prices, but it's way closer than where it was just a day ago or a couple days ago for me.
Is anyone invested in Facebook?
I have a small position.
Same here. I've actually added a little bit yesterday to make it more of a feeler position. It's only a couple % of the portfolio. So I definitely am looking to add to it, but not quite at these prices. But I'm much more interested now than I was a few days ago.
I will note as well in Dataroma, they track the most popular super investors. The top 3 companies that are owned by all those super investors are Facebook, Google, and Berkshire. So, lots of great investors have piled into Facebook lately. So it's.
I feel like most of the large managers are essentially closet indexers.
Right.
Yeah.
So
in which
you
case,
see it in the index,
right.
you see it in I don't think that's a guide for anything.
Yeah.
Is it just me or does Facebook get an unfairly bad rap compared to some of the other big data companies? For example, Google relies totally on data and essentially mining personal information and then using that for profitable ads or for making ads more effective. Facebook follows a similar model, yet it seems like Facebook gets a much harder time from like a media sentiment sense when it comes to their business model. I don't know if that's is that a bad take, but that's kind of the feeling I get.
I think it's still the Cambridge Analytica stuff, the whole election thing that's
still
with Facebook, and that's going to be really hard to shake. Is my opinion.
Yeah, they're not exactly the same, but overall, it seems like what people really are concerned about is privacy. And yes, you could talk about steering and that sort of stuff, but it seems like Google always gets away scot-free, even though the business is quite similar.
Yeah, I've got a little bit of a different take. I don't short stocks. I don't I'm not saying Facebook's not going to be valuable in 5 or 10 years, but I'm not confident on their business model. I'm feeling very not good about their competitive dynamics. And this week, I had an extreme moment of clarity on the importance of circle of competence and moats. I know Facebook. I know the online advertising world. That's my business, and I know it better than pretty much everyone on TV talking about because I'm in it every day. And there's a list of things, but it did not surprise me what happened to Facebook. And as far as their competitive dynamic and their moat, young people are not on Facebook. They're just not on Facebook. Instagram, they're on there, but that is aging out as well. And TikTok and Snapchat are overtaking that younger generation. Facebook isn't there. and they have this thing called Reels. Doesn't seem to be picking up like these competitors are, and it's a zero-sum game. There's only so many hours in a day. If attention's going to TikTok, to Snapchat, they're going to lose. And so you have that problem. You have the Apple iOS privacy change where now you have to opt in to tracking. I'm telling you, I've run Facebook ads in the past. I've run them now. They're not as good at all compared to what they used to be. I've seen that. I saw it day to day, and now it's kind of coming out to the rest of the world. But all these super investors or so-called super investors that just buy Facebook over the last 2 years, I've really kind of had a lesson in circle of competence over the past week, because the things I see them say, the things I see people say on TV, it's not as clear at all, like compared to someone who's in it every day. And so I just kind of got that experience, and I do think they're in big trouble right now. Is my take.
When you say things are worse, what do you mean? Like things are like ads are more expensive to run as effectively, or just don't work? Like, could you elaborate?
Don't work as well, and they're not as profitable. So back in the day, I would be able to, and that's just anecdotal, but I'd be able to set up different targeting where I could pinpoint people and get in front of the exact right people. It seems like you're less able to do that these days because they're less able to get people's information, and they're talking about, well, they're going to have workarounds for it and all that kind of stuff. We'll see, but it just showed the moat was not nearly as strong as people thought, because all it took was one change from Tim Cook, and he kind of said, look who's boss, and he drastically impacted their business. And so you've got that going on. You've got the not as profitable thing going on because they're taking a bunch of money and putting into Meta. Maybe that works, and they got a whole new business and a whole new growth story. Maybe it doesn't. And then you've got Snapchat and TikTok taking young people's eyeballs away. So, and then you have the regulatory threat on top of that. So I would not feel good if I was holding their stock today. I want to feel comfortable being able to lay out what the next 10 years is going to look like.
My question to some of those concerns are clearly valid. My question would be, if Facebook's big potential barrier ahead is things like privacy regulations, Apple or whatever providers putting up barriers to collecting data. If that affects Facebook, my guess is it would also affect anyone else trying to advertise. And unlike maybe a new player, Facebook already does have quite a bit of data to go off of. So I think what I'm really getting at is, if all players are hurt by this, Facebook is still in a relatively good position relative to everyone else, if that makes sense.
I would say not all players are hurt by it. You've got Amazon. People are giving them their information. They're typing in keywords on Amazon. That's effective advertising for
because it's internal
advertisers.
Right?
It's internal, and they get the information. Customers willingly give it up when they type in that search bar. Amazon gives it to their advertisers. Their advertising revenue was up 30%. Google, people willingly give the information. Apple, a lot of people think they're putting all these privacy things in place so then they can implement more advertising throughout this ecosystem of billion users. So I don't know. I don't like their competitive position. Now, that said, I saw Jim Cramer on TV the other day when this happened, and he was saying, yeah, I hear everything you're saying, people talking like this, but it's Mark Zuckerberg. And Mark Zuckerberg woke up today. This is the way he was talking. And he was talking about Mark Zuckerberg, and Jim Cramer was like, Mark Zuckerberg woke up today and he will do whatever it takes to win. And so he's got confidence in that. I can see that argument, but I don't have good confidence if I can gauge that or not. It sounds a little bit more of a bet, a gamble, as opposed to like the sure thing.
Now, where does like the metaverse and all that stuff fit into this? Is that just, do you write that off completely? I think a lot of people are, because we're rightfully focusing, I think, on the ads business, which is the bread and butter. But what about the offshoots that might become the new big revenue stream 10 years from now?
So I would say, as far as metaverse goes, I would say if that plays out like they think it's going to play out, and they win that space or whatever it develops into, they could be the biggest company in the world one day. And I'm not saying that can't happen. I'm saying that could happen. But one thing I've been thinking about, like with all these companies that like don't make a ton of money now, but they're going to make a ton of money in 10 years, and that's why they're selling for so high, and then they drop all of a sudden. That's not the kind of investing that I do, that I think a lot of us do. That almost feels like Silicon Valley private equity startup, where you're just trying to gauge the future. And I know investing in general is gauging the future, but I don't know. I just that style of investing, I have no idea if the metaverse is going to happen or not, and if it happens, if Facebook's going to win. So therefore, I don't really think about investing in them at all, if that's the reason to invest in them.
Sure. CJ, I'd love to hear from you, since you said you own some Facebook, and I'd imagine
he was selling it. He was selling it while I was talking. I saw him. He was selling it.
Yeah. I don't know if you have a bullish counter to what Jason's saying. I think what Jason's saying is there's definitely merit to a lot of it.
I would just say, I would just put it this way: I was not surprised any of this happened.
No, sure,
yeah,
sure. You can't really be surprised in with how volatile the market can be sometimes. Though I think that the dollar amounts are what are really surprising, and how much a company's valuation can just change in an instant. I think that's what's most surprising.
Facebook's biggest moat in this metaverse thing is the amount of cash that it has. That's pretty much it.
Yeah,
I mean,
they could buy or crush any other competitor. Yeah,
yeah.
Which they've kind of done. I mean, they did that with Instagram, and look what it's become. We'll see what they do with WhatsApp. That's already a huge platform.
Yeah, CJ, what do you think for their future? Like, what makes you want to buy it and continue to hold?
Well, I'm continuing to hold. I'm not necessarily buying, but I will say that I didn't buy from its peak or anything like that. I've been holding it for quite a while. I would say that there's quite a lot of pessimism baked into the current share price, and maybe it is true that Facebook will never be on top, and maybe it'll be overtaken by TikTok. But I think that even with very conservative, reasonable growth assumptions for the business, I think it's more than let's say fairly priced.
At least compared to a lot of high flying tech companies.
Without
nearly the same cash flow.
Yeah, I mean, yes, in the past 10 years, it's been an incredible business, and you're right. They're probably going to be burning a lot of cash trying to get this metaverse thing going. That might work. And yeah, as you said, if they do secure this metaverse, which, I'm not necessarily sure that there's going to be one metaverse or it's going to be controlled by one company. It's sort of a nebulous buzzword, obviously, because it doesn't exist. I don't even know if you need to have a take on the metaverse, other than they're going to continue to generate cash from their ads business at a reasonable enough rate where they can support any burn that might come from that. And even if the metaverse doesn't work out, they still have Oculus, which is growing a lot.
Has anyone used Oculus?
Product. Yeah.
What's it like? It just seems.
Well, I got sick. No, I haven't.
Sell it, CJ. Sell it.
It was the old Oculus, but I haven't used the new one. But it was.
I don't know. I mean, having a screen like up right in front of your eyes doesn't seem ideal. Yeah. Maybe to Mark, I don't know. Maybe to Mark, it's fantastic.
I know a few people who play ping pong on Oculus, and they say they love it. So
ping pong,
for what that's worth.
Have they tried it in real life?
Tried ping pong in real life? Well, it's from the pandemic, they can't get together, so it's a way to play with your family and friends from a distance.
I don't know. It's like the Wii.
Sorry, the Wii sucks. Anyway, you guys, we got a super chat that we totally
missed. I had that.
That hopefully he's still here.
It's from our man Frank,
our beloved Frank.
He's maybe this is an apology of some sort.
Somehow I doubt it.
Right, we got $2 Australian. I mistakenly called them dollars once when Jason was on the show, and he was upset by that. But it's an Australian dollar, not a dollar. So he says Tencent and Facebook are similar enterprise value. Which is better? Which is the better deal, or which is the better company? Because it's definitely apples to oranges if we're talking about company because Tencent just does so much. Anyone want to take a stab at that one?
I feel like both have a possibility of not existing equally in a way.
What do you mean?
For different
I mean,
reasons, I'm guessing.
Yeah, for different reasons, but it's possible they both won't exist in, I wouldn't say 10 years, but more than that, like in 20 years or so. Yeah.
You got to elaborate for me, Karan. Like.
Okay, so for Tencent, I think it's pretty obvious. Like we're seeing them spin off stakes. Maybe they might have to spin off something else.
Like they'll unravel into a bunch of little sub companies. Is
I
what you're
think
saying?
so. Yeah.
Sure.
Yeah. And Facebook will just disappear in the metaverse. So that's they'll just burn all their money into the metaverse.
I mean, couldn't you say that about pretty much any company? After 50 years, there's a high chance it won't be around.
Hey,
or
we're
it'll
talking 15 or
Berkshire's
20.
gonna be
Jack.
around.
Come on now.
I think Berkshire's
Sure.
going to be around 50 years from now. Yeah.
Sure.
That's true.
So
Well, good. I see Frank.
Well, we didn't
and
answer the
Jason,
question.
Frank and Jason made up in the chat. That's good to see.
Anyone
You
want to take a stab?
haven't seen it lately, Brad. I'll take it, Jack. I don't feel comfortable going to bed for 10 years as a Facebook shareholder. I see scenarios where they don't exist in 10 years.
Fair.
Because of these competitors. I don't see that. I see the possibility with Tencent, like I had said earlier, with the regulatory issues, maybe a 10% chance of big problems there. But I feel a lot more confident that if I couldn't sell for 10 years, that things would work out pretty good for Tencent, whereas Facebook, I don't think their moat is that strong to me. I could literally see people not using their products in 10 years from now.
Is part of that
A scenario. I'm not saying it's likely. I'm just saying it's a scenario.
Right. Is part of the relative value for Tencent because of their multiple, like, pretty distinct businesses within it that all could stand up on their own? Is that a big part of it, or is it really just more negative towards Facebook, less positive towards Tencent in this little comparison here?
It's both. It's very negative on having to think about holding Facebook for 10 years and then not being able to sell for 10 years. And then with Tencent, they've got a user base built in. That user base, as I understand it, I don't think it's shrinking like we were talking about with Facebook.
True.
And they do have competition for eyeballs, but I more equate Tencent to the Apple iOS in terms of, like, it almost seems like the phones over there, iPhones and other phones, they let Tencent almost act as a or WeChat almost act as a operating system. And so they do have competition for eyeballs, but no like direct competition like Facebook has, and ferocious competition. I mean, imagine, you hear the anecdotes from people with, I've got young children, but like people with like preteens and stuff like that, they don't say anything about Instagram or Facebook. They talk about how their kids are on primarily TikTok.
How do you feel about this, Jason? That the people with disposable income are the ones that are still on Instagram and Facebook platforms and stuff. So monetizing people that will actually, click through ads and stuff like that. Do you have any experience with that? Or?
Well, I know it's hard to get enthused about their ads when I've seen direct search ads, both on Amazon and Google. So there's that issue. And then the other issue is, this is the problem. The people with the disposable income, me and Brad, we're on Facebook checking in with our neighbors, talking about politics and the weather and all that kind of stuff, ranting and raving. 10 years from now, we're in the senior home, and I speak for both of us. We're not online anymore.
Wow.
And so sorry, Brad. No, I'm kidding. But like my point is, 10 years from now, the group that's on Instagram, that's on Facebook, 10, 20 years from now, they're going to be moved on to a different stage of life. And it's those 12-year-olds, those 13-year-olds, 17-year-olds, 22-year-olds. Those are the ones who are going to have that money flowing 15 years from now. And that's what I'm worried about. It's such a direct threat. So, but maybe they'll figure it out.
So it's more of a demographic thing in that the there's already not a huge moat in your view, but there's also the demographic threat, and that you're not seeing a lot of the next generation hop on it.
Time is not going in the right direction if you don't
Sure.
have the young users.
I mean,
Yeah.
I
But
feel like
maybe Reels will take off. Maybe we'll all be talking about Reels.
I feel like we
Yeah,
haven't
maybe.
even seen if Facebook is going to continue growing. We haven't even seen the platform that they're going to use to do that. So
Yeah.
I mean,
It
and that's
definitely-
hard to bet on, right?
And
Because
that's
like,
what they're
doesn't
going
even
for with the
exist.
metaverse, I think. But like again, who knows what that's going to look like?
But
And
again,
to what you were saying,
with
I
the
think
metaverse, it's like Web3, right? It's this decentralized thing. How is Facebook really going to capitalize on something like that?
But I think
It doesn't
what
seem
Jason
to
was
fit.
what Jason was saying earlier about it being almost like a VC venture capital type thing, as like that's what gets to their next stage. It makes sense. Like it's a good argument. So, anyways, we should move on from Facebook since
Let's move on.
we've talked about them for quite a while.
Hey, Jack,
now.
not to burn your segue here, but a lot of people are moving on from Facebook, so it's interesting you phrase it that way.
This is also very true.
Well played.
Yeah. What's another big mover? Let's see. We got PayPal. PayPal dropped quite a bit as well. Let me pull up their chart real quick.
PayPal was over 300 like 6 months ago, and now it's 126.
Oof.
It was just a huge dive for PayPal.
So is that down a little more than half, about 50% a year ago?
Yes, 50% a year ago, and then
Yeah.
year to date, it is down a third, mostly off the last earnings.
And,
And
you know,
they're still-
Looks like
Terry
Alibaba.
Smith talked about PayPal recently in one of his talks. Was it PayPal who was thinking about acquiring Pinterest? Am I getting that right?
Yeah, that sounds
That
right.
sounds right.
Yeah. So Terry Smith just thinks that's not a good idea. You know, it's outside of their domain of expertise, and he thinks an acquisition of that nature is just going to destroy value. So that'll be interesting to watch play out. But I think that's part of why we're seeing this dive, in addition to, you know, the fear of rising interest rates and all that, which take a lot of value off companies like PayPal.
I've heard a lot about the competition argument for PayPal, like the different payment platforms popping up. It seems like a lot of companies, or bigger companies at least, are trying to have their own payment platforms, and that's might be a big threat. I know PayPal they have PayPal and then also Venmo, which is a huge asset, but
Right.
Is competition a big concern?
It's a good question.
I'm not a huge expert in the payment processing space, but
yeah.
I'm happy
Well, one thing first, Jason. So
Yeah.
what Terry Smith says on this, he thinks, you know, the payment space has so many tailwinds right now, and that basically all of the players in that space are going to benefit from more and more people using digital payments. So that's his perspective on that.
sure.
Yeah, I'll just jump in there. My take on PayPal is I had looked at it very briefly like a few months ago, and I kind of got that FOMO. I hear a lot about payments, and obviously there's a lot of growth there. And PayPal stock price had gone up a ton, and they must have been in the headlines for just doing so well. So I looked at them very briefly, and just instantly I was like, this is totally like, I'm not saying the word overvalued because it's not real. I don't really have the skill with PayPal to judge it after just barely looking into it, but the valuation seemed like tremendously high, like crazy high. So I was looking at them on online. It looks like they make money, they make net income, they make operating income, they make more cash flow from operations and capital expenditure, but like, and obviously there's huge tailwinds with the growth there, but like despite dropping 50%, they're selling at, I think, like around 31 times free cash flow.
Yep.
And so like, I guess what is your yield on that? Like 3% or something like that.
Right.
So yeah, so it's just like, so if you
Betting on big
double it,
growth.
well, if you double it, the stock price when it was up double compared to where it is now, you're getting like a free cash flow yield of like 1% or 1.5%. So I think it was still a great business, but it was just really, really priced really high for whatever reason.
Yeah, and that's a big reason. I haven't really, even with this drop, I haven't bothered to look too much at PayPal because just they'd have to grow this cash flow stream quite a bit, and they're already a big company. So how much more could they really grow it based on their current price? And it's an uphill battle for sure. Not that they couldn't do it, but I haven't bothered to look too closely into it. I don't know if any of you have. Brad, I know you were paying attention to it because of Terry Smith, I assume. But I'd love to get your thoughts there, because I know they're experimenting with like the crypto payment processing sort of thing, if you can really call it that. Maybe that's an avenue for growth. I don't know. Anything there?
Yeah, I haven't formulated enough of a thesis on PayPal to weigh in yet, but I mean, it's caught my attention.
But otherwise, I'm definitely with Jason on it. It's a low yield, and they'd have to grow it quite a bit from here for it to make sense, at least for me.
One thing I will say with Terry Smith in terms of free cash flow yield, the average free cash flow yield of companies in his portfolio, I think it's like 2.8% free cash flow yield. Okay, so less than what PayPal is trading at now.
Is that pulled down by is that pulled down by a few particular holdings, or is it more?
No, I think it's fairly consistent.
Mm-hmm.
Like I think that's an average. It's not like what would the word be?
It's not pulled by the tails or whatever you want to call it.
It's a mean.
Right. What was I going to say? And he's done, I think, like 18 or 19% in his portfolio over the last decade. Obviously, the market's been hot, right? But it's still outperforming the S&P. So, his whole thing is, he's paying more for these companies, but he thinks the quality outweighs, what he's paying up for them. So I'll just throw that out there.
Yeah, it's not to say that something at a 2 or 3% yield couldn't work. I was just trying to figure out where does PayPal go from here, since they've grown revenues about 20% per year for the past few years, and they're currently at $25 billion in revenue. How much more could they keep that clip up? If they do 25% or 20 to 25% per year for the next decade, they'll be in fantastic shape. They'll be huge, but could they really do that? That's where I'd hesitate. Terry Smith might argue that, if you really get the best, greatest companies, they can do that for a long time. They become the $1 trillion mega companies, and then you benefit.
Well, and I guess my big question around that is, which markets are PayPal in now, and which markets do they have ambitions to expand into?
Mm-hmm.
That would give us a sense for what their, TAM is.
Where do you think MasterCard and Visa kind of fit in with this whole thing? Because I see their shareholders, they should be worried with the change in the payment space, with change in everything. What do you guys think about those two?
Hasn't there been a little pressure on at least Visa recently? Then they try to bump their rates up, and Amazon got angry or something. Do I remember seeing that correctly?
Yeah, in the UK.
That's right.
And then I think Amazon folded. I think.
Sure, probably. I don't know how much leverage you really have over the largest payment processor by quite a few metrics.
I've never looked into Visa and MasterCard. I don't know really. I know basically they move money around or whatever, but I don't know what they do or why they have the moat they have. But it does seem like there's a lot more players in that space than there was 20 years ago. Karan, one thing has always stuck with me. At some point, someone asked Charlie Munger about American Express and payments and where everything is going. And he said something to the effect of, there's a lot of rewards in that space. There's a lot of things happening. And I think he said something to the effect of, but he doesn't know where it's going to go, but it's going to be interesting. And ever since he said that, I've kind of never really been too enthused to look into the space, because it does seem a little bit unpredictable, and I don't really know the market or know how you pick winners in that space. I will say one thing for cloning, though. Berkshire Hathaway bought, I think, Visa and also MasterCard when they IPO'd both. And they've done, I think, Well, whenever they became public, I don't think they were public companies like a long time ago, but they bought at least MasterCard, and like it was a 5 or 6 or more bagger, and so that's just a little credit there to cloning. If someone would have caught that, would have been a tremendous buy.
I think Guy
So
was also
kinda-
invested in MasterCard, right?
Yeah, Guy has American Express, which is even bigger than his MasterCard holding.
Hmm.
But no Visa. I thought he owned Visa as well, but
Yeah, so when I do like Visa stock, it only goes back to like 2008, and then MasterCard stock goes back to 2006. That MasterCard, I think an 84 bagger.
yeah. What else? What else are you guys noticing that's been taking a dive?
I'm looking at actually Snapchat from earlier that
Okay.
they have not taken a dive. They took a
A dive and
rocket
then a
ship.
pop,
Well,
right?
they
yeah,
went
true.
down like
Yeah, a
20%.
roller coaster, more like it.
Yeah, there you go.
But today, a rocket ship.
Do
But
any of
I'm,
you use Snapchat?
very
Nope.
sparingly. I did a
I
lot
don't
more
like
in high
it.
school.
Okay.
When I was in high school, it was like just taking off. And I had thought it kind of died, but then I see like this, the number of daily active users.
Wow.
And it keeps marching up to 300 million as of Q3 2021. And they finally had some cash flow over the last year, after losing a lot of money over the past few.
So they're positive for the first time last year.
Yeah, about, we'll call it 230 million in free cash flow, and that's on a $63 billion market cap now. So they got some growth to get to. But I'm just surprised to see them more than hanging around. They're continuing to grow users. I don't know how profitable they could possibly get, because I think what we were talking about earlier, Jason, with kind of like or CJ, you were bringing up with like who has the money. You know, when you can only advertise so much to children and have it be super profitable. Is this the right demographic? Is the Snapchat demographic correct?
Well, is it children? I mean, it could be like 20.
Yeah. I don't mean to say like 10-year-olds, but like it's a younger demographic, which if you go by the stats, will probably have less money than an older demographic. So I don't know if that's going to hurt them, but if to Jason's thesis about the demographic growing older and then they have the money, you could easily make some sort of argument that it's going to continue to grow. But still, there's some lofty growth assumptions caked into here at this valuation.
Yeah.
But 60% in a day.
My question might seem... Sorry.
Go for it.
I had just a quick question. It might seem like a dumb one or maybe an obvious one, but does anybody think what's happening with the companies that we've discussed is the sign of an efficient market, or does this seem normal? Or yeah, I mean, Snapchat doing this yo-yo because they had positive earnings for the first time ever, and they're up 56%. I mean,
is that a signal of efficiency?
Doing the show if like markets were efficient?
Yeah, right.
Yeah, that's my part. It's
part of a broader thing, I guess. Just the violence that share prices do. Like even stable companies will have a huge delta between their 52 week high and low. Usually something like 50% in a ton of cases. Even the big blue chip companies that won't move anytime soon, they'll have pretty big spreads between their highs and lows every year. And is the company really changing that much in valuation during the course of the year? No, but that's what happens. It's just crazy how fast things can move, even without any sort of fundamentals.
Yeah, I'm sure that Snapchat could have had plenty of extra expenses to spend and keep their earnings negative or their free cash flow negative. And then, Snapchat would be ripe for buybacks
and guidance
from management. Yeah.
And guidance plays such a big role. There,
Yeah.
you know, as long as you say that the company's doing great things in the next year, okay, sure, we'll take your word for it. And if you say, oh, it might not be as great, then people freak out. So just very emotional. And unless you consider emotions efficient, I think that would answer the question.
Just seems a little bit more wild than I've been used to from, you know, the past 3 years, 4 years. I mean, this is quite volatile, as Jason was saying. It is fun.
It makes sense to me, CJ, in the sense of interest rates are now moving up. It just seems like whenever they do,
maybe they say they're moving up. They haven't yet.
I think they're going to move up. But it seems like that jolts the market. That gives people options to do things with their money. And I don't know. It just seems like it's a little bit of a wake up call for a lot of market participants, and they're kind of looking at what they're holding. And what is kind of weird is that all of a sudden, whether it's like investors or the business press or something, there seems to be something in the zeitgeist of like, you know, like show me the money. Like all of a sudden, investors became a little bit more or a lot more focused on profits today and real earnings. And it is weird how that seems to happen overnight, because didn't we all know interest rates were going to go up like eventually at some point? But then it happens and everybody acts differently.
Well, I mean, even Kathy Wood is now a deep value investor, and she said so herself.
Did you guys hear
we're going in deflation?
Yeah, Karan liked that one.
Did you guys hear about the short that's based on her investments? There's another ETF or whatever they are.
Short
that is like taking the opposite. Yeah.
Just as proof, this was back at the end of December. Deep value now. All right, that's enough Kathy Wood. Someone in the comments mentioned the anti-Jim Cramer index.
Right.
I've got it here from Reddit.
The inverse Jim Cramer.
That's such a creepy picture.
Let's see what we got here. I guess this is the change as of must have been a few days ago or something like that. This is ones you recommended in 2021 and how brutal it's been. I see a lot of repeat names on here. Anyways, I think Jim Cramer is like the embodiment of like general market sentiment. So as things go down, he wants to sell, and as things go up, he wants to buy. So I think he's probably a pretty good signal of like what the average investor probably thinks at that given time. It's always late. It's always late to the party, it seems.
What comes to my mind is I respect Jim Cramer. I like what he does. But you guys are all in this business to some extent. The content business about investing, it's like a totally different muscle and personality than actual hardcore investing to beat the market. I experienced that myself a little bit to the small extent that I have my podcast and all that. But the thing with content I was thinking about today, you have to have people like you. And I saw the comments when I was talking bad about Facebook, and everyone's got Facebook in their portfolio. No one wants to hear it. So there's like I don't know how you can beat the market and kind of crush it as a career in content about investing at the same time. It seems like you have to make a choice.
Absolutely, yeah. That is, if you keep talking about the same companies, you drill those ideas into your head. And putting out content is kind of the inverse of being, I'd say, a better investor. I mean, at least that's my.
Because you want to do things that are popular, because popular gets views, and popular may not necessarily mean the right investments, or usually it means the opposite.
Scotty asked a question, basically what we're talking about now earlier. I wanted to get to it. So I guess we'll do this before we hop into a couple more stocks. But does running an investor YouTube channel make it difficult to sit on your hands and wait? Or would you rather, does it struggle? Does it create a struggle with FOMO and I guess hype? The desire to stay likable, as you're saying, Jason. It can be difficult. There's definitely a bias to it.
Brad doesn't swing often, and he's the most successful YouTuber on this chat here tonight. So, Brad, how do you do it?
Yeah, that's it.
That's true.
Well, more and more, I try to make content that's not about particular stocks. It's more about, what am I learning, from this investor's letter to shareholders, all these different rabbit holes I go down. So I think that's part of it. And speaking to what you guys were talking about before, how you really have to put out what's popular to grow. I think there's a fairly large base of investors on YouTube that are kind of contrarian value investors, and so you don't necessarily need to speak to the masses to do well, right?
They're not crushing it though, in my opinion.
Well,
the ones that are crushing it on YouTube are the ones with stupid content.
Well, that's true.
Give it time.
I wouldn't say stupid. I wouldn't call them stupid, but
right.
I mean,
yeah,
like let's.
When I see a successful YouTuber, and I'm talking over 100K subs, and they're talking about investing, look at their thumbnails, look at what their videos are about.
But to them, they are value investing from their perspective.
Everyone's a value investor, technically, by the broadest definition.
But that's what I'm saying. I don't think a lot of the financial channels or whatever who have hundreds of thousands of subscribers. When I see some of those guys, I don't think of investors. I think about YouTube technicians and content creators, and they just happen to be talking about investing.
Yeah.
Well, I mean, Everything Money, Investing with Sven, they have over 100,000 subscribers.
And
I
they're
think
firmly in the value.
They put out quality content.
Yeah, not talking about them.
Yeah.
But indeed,
Sven
it's the top the top like 0.1% for sure. Definitely have a lot more hype involved, whether it's intentional or not. It's definitely, there's a little bit more YouTube engineering going on than pure just investment, getting into the weeds and talking about pure wisdom, at least from our perspective.
Yeah. In 2021, all you had to do was talk about Alibaba, and you could have probably been very successful on YouTube if every one of your videos was about that.
And value investing is just, it's inherent, at least our version, the kind of Warren Buffett style. It's inherently contrarian. You're saying that the market is wrong about something. And it's less so riding a hype wave, and it's more so saying the market is mispricing this thing. I'm going for it now. So that's different than a lot of people's approach. A lot of people will either buy something completely blindly and they don't care about like whatever's going on at the company, or they will, or they'll take more passive index approach. And they think that you can't beat the market. And there's certainly logic to that as well. But this value camp, it's contrarian, so it makes sense that the population would be comparatively small, even though it's still a large camp compared to some of the larger groups out there.
Yeah, I think Li Lu was talking about this. He was saying something like 3% of investors are actually value investors, like they're trying to figure out what something is worth before they buy it. So, 3% of the huge investing universe on YouTube is still pretty big. But it's not as big as what these really big channels are catering to.
Sure.
Yeah.
That's a good question, Scotty.
Should we give a shout out to some value channels that we like?
Sure.
Mentions?
Yeah. Brad, you had mentioned Everything Money, Sven Carlin, both great.
I learned how to invest from investing with Tom.
Yeah, he was my initial foray into like proper value investing.
Hamish, I appreciate Hamish.
Yeah,
Hamish Hodder. Honestly, I don't watch a lot of content on YouTube other than like interviews or Q&As with like well-known kind of.
I like Monish's YouTube channel.
Yeah,
he's all right. Yeah,
it's okay.
No, but I'm serious. Like, if you think of him as a YouTuber to that extent, because he's got, I don't know, 50,000 subs or 60. I mean, the content that he puts out, it's amazing.
What I love about him, I mean, he's not a YouTuber because he's not creating the content for YouTube. He's just recording his Q&As with students, right? That's really what those sessions are about. But he sees the leverage there to also put that on YouTube.
You know why he sees it, Brad?
Why is that?
Because Buffett saw it. I think it's a Buffett clone, the university lectures.
Yeah, absolutely.
Yeah. He liked my tweet today, Brad. Monish did.
Is that right?
You're moving up in the world, Jason.
Yeah, he posted a picture of him in Turkey, and he said beautiful scenes or something like that. And I said, I also hear that they have beautiful something warehouses in Turkey. And he liked it.
Well played. Well
Yeah.
played.
Very
So
good.
that explains the shirt. You're meeting him after. Got it.
Yeah.
That's the monogram shirt.
That's
maybe
why he
somewhere.
shaved up a little bit too.
Worse.
Yeah. I wish.
Well, we're talking about value channels. One I came across recently is Cameron Stewart. He's got about 40,000 subs, and he's done he does a lot of like discounted cash flow type analyses of companies, and from what I've seen, it's quite good. So they're definitely out there.
Oh,
There's
sorry. I said everything money. I meant new money.
both actually.
No, I meant new money.
Well, I would definitely put everything money is. They talk about trading and stuff a good amount too, but a lot of it is really just high level kind of value style, looking at the
One is
earnings of the
everything
company.
8 pillars. That's what it should be called, not everything
Yeah,
money.
true. It's like their eight pillar structure, and it makes sense. It mirrors a lot of like what a magic formula might look like, and it's a lot of the same principles. So, but they put out some good content.
We've got a few upvotes for Cameron Stewart here as well in the chat.
Yeah, I came across him pretty recently, and I don't know why I've missed him for so long, but he's got some really good stuff.
Amid mentioned Philtown. I got to be honest, Philtown, it's a little bit light on substance to me. I appreciate Philtown. I've enjoyed his books in the past, but the YouTube really just seems like a promotion piece for getting people into his courses, which bothers me a little bit, but it is what it is.
Are we talking about Meet Kevin, or wait, who are we talking about?
You can plug Meet Kevin if you'd like.
No, I want
he's
to
sold.
mention Sagar.
He's sold.
Like
He's a cash guy now. Me, Kevin's sold.
Yeah, he's out. He's out of the markets.
Crazy. Any other channels?
I come across Stockado. Someone mentioned it. It's Sagar's channel. Sagar, he had a channel before. He's been on Tom's podcast also.
Oh yeah.
Is he still doing videos? I haven't seen him in a while.
No, that's what he closed it. Then he started a new channel called Stockado.
Okay.
Yeah. I don't think a lot of people know about his channel. It's at like 2,000 subs or so.
It's so frustrating when like you find a really good channel, you forget to subscribe to it, and then it just disappears. Like you just can't. You have no idea where it went, and you forget about it because it doesn't pop up in your recommended. It's one frustrating thing about smaller YouTube channels, and then it's refreshing when they come back like a few months later and they got many more thousands of subs, and it's like, oh cool, I was there, I swear, early on. So
Stockado,
yeah, that's Sagar's channel.
Oh, and Andrew Brown, another one. Pretty much anyone in that was in the margin of safety team. Some are included in this stream, but a lot of good channels there too.
Do you watch anything, Jason, on YouTube, or are you just a creator?
Yeah, I love YouTube. I watch a lot of stuff. As far as investing goes, I'm a fanboy here. I mean, you guys are my guys. Look at my subscriptions on my YouTube channel. I don't really find the content that compelling on other channels, and I really like what all of you guys do. So, CJ, I'm a big fan too. The other day, you put out a video, and it was like the intro was like, "Good morning." And I like that. It made me laugh. Do you remember that?
Thank you.
That was your key takeaway.
Yeah.
No, that wasn't the key takeaway, but it was funny. It was a nice way to start a weekend day or whatever. I pull it up. Good morning. Good morning.
Thank you, Jason.
Karan, I mean, if we're gonna critique your channels live to your guys' face, Karan, I need some more content. I'll put it that way.
Is that what we're doing? I didn't realize we were doing that.
I'm just gonna put out one video a month, and that's it.
Just the update video, Karan?
Just the update video.
I like it.
I've completely scaled it down. Like less social media.
Does it feel good?
More research, yeah.
As long as it feels good, that's what matters.
Yeah.
All right, shall we tackle a couple more stocks before we wrap it up here?
Can I bring up Amazon, Jack?
Oh, sure. Yeah. That one popped after falling a bit, so a little misleading, but definitely up big.
Yeah. Something stood out. So I'm on CNBC, and it says that the AWS, the Amazon Web Services, the cloud business generated I'm rounding up here, $18 billion in revenue. That works out to a 39.5% year-over-year increase. And the unit ended the quarter with 5.29 billion in operating income. So I don't know if I guess that margin is somewhere like 27 to 30% or something like that. That had me thinking about Alibaba, because the way that Frank always talks about Alibaba, and I've learned from him in this, is that if they continue to hold their 40% share in the cloud market, and the cloud market grows at X percent, it's going to be worth a lot of money. And if the multiple on the sales is the same as here in the US or other big web cloud companies, it's going to be worth it more than the current market cap. So have me thinking about that. I think I guess CJ, I'd like to ask you this, because you probably have some experience with these companies. This whole cloud thing, like Amazon Web Services, is it just like as strong as it seems to someone who doesn't really know much about it? Is it really like actually the backbone of the internet? And like, how important is this cloud stuff?
It's supremely important. The
What
cloud
would we
computing
be
is probably
doing without them? Like, what happened before?
on-premises servers. So yeah, you just have big stack of computer servers where you store all your data. Obviously, there are a lot of problems with that.
A lot of bottlenecks with that.
A lot of bottlenecks.
Yeah.
A lot of expenses.
cost.
A lot of
Yep.
Slower, less capacity.
So something that's
possibly less secure as well.
changed for me, and I'd be curious if you guys feel the same way. But when I first heard about the cloud, as someone who's not really in that space, I thought, okay, this sounds like storage, and where's the moat? Like, anyone can just start another unit of storage. But the more I've read about it, the more I've learned how technical it is and how much costs are involved. And like the other day, I was reading about how the mega companies like Google and I think Apple and I think Amazon, they pay for like underwater cables to go across oceans so they can keep their uptime going. And it's like, how are you ever going to compete with one of these companies once they're off to the races as a cloud provider? So it seems to be like a space I want to get into if I can.
It's surprisingly complex. Well, maybe not surprisingly once you see it. I'm actually working on my first data center lease for my job as a lawyer. So it's weird because you actually need some decent technical know-how, like, and actually reading through these leases. There's so many different they have a unique set of utility requirements, and it's just kind of its own thing compared to the rest of real estate. So it's a niche for sure. And yeah, it's not particularly easy to break into from my limited experience working on it, because of how complex it can get. So that's like from the legal side.
Do you guys have any thoughts on IBM? Does that come across your radar at all?
Never for anything positive.
Well, I'm seeing trends there. They have a new CEO. He came in and he sold off an older business line. And they're one thing I like about them is that they're talking about the hybrid cloud, where companies can kind of like use cloud companies to store their data with the cloud, but then also I don't know if it's on premise or be able to move it around or own your data. And that, from a business perspective, seems more attractive to me than just giving or relying on one big company for everything. And so they're kind of on my radar as like maybe a company that's not priced that expensively that might be growing in the upcoming years, to the extent that would surprise people.
Jason, I've never mentioned it, but I used to work at IBM at one point.
Ooh.
Yeah, I
never go back.
Yeah, no way in hell. Like, I would short the shit out of that store.
Wow, pulled something out of Karan here.
Yeah,
Karan, is there any chance you worked for the company, the business that got spun off? I can't even remember the name. It's some weird name, but
I was there like 5 years ago. So Big Blue, like back then, spin-off wasn't a thing. So even the CEO was different at that point. So yeah, I think it's a company with more issues behind the scenes that I think a lot of people realize. And
So what do you guys think about like a company like Amazon when it puts out impressive numbers like this with their growing cloud business? Is it like where you guys are like, oh yeah, I might buy it, I'm going to look into them more? Or do you guys kind of have the perspective like, yeah, I'm going for 10 baggers. I missed Amazon. I'm never going to own it, so I don't think about it that much. Which is more where I'm at, but I don't know if that's correct. So how do you guys look at these huge successful companies?
I would never say I'd never would own it. I would like to own it, but as with everything, it's got to be for the right price. I don't know how much more you could squeeze out of it, even if they keep growing at a pretty good clip. So I'd want it to come down. I did a very basic analysis on Amazon recently, and I think they need some pretty huge growth, even from where they're at now, to make the valuation make sense for me. So I'd rather wait to where they don't need to hit those mammoth growth numbers, and then still be okay, because it's definitely a fantastic business and they just continue to keep plugging along. But they're priced for some great things for sure. So if they don't hit those great things, which they might, but if they don't, they're in trouble. From a stock perspective, the business will do fine.
Brad, have you ever been tempted to buy Amazon? Have you ever gotten close, or is it just always a pass?
Yeah, it's always been a pass.
Do you remember one time Monish said something to the effect of like, maybe it's a big mistake that he's passing on Amazon? I remember him saying something like that.
I think he
recently.
even said it's
Amazon,
probably a mistake.
Yeah.
He was
What'd you
buying
say, Carl?
Amazon in 2001, right?
Oh yeah, he did own it at one time.
Like $14, $15 a share or something.
Yeah, and he got like a double or something and got out.
Something like that.
Yep.
Yeah, Bruce here
I
says
like
that
Bruce's comment.
Amazon is like Costco in that it breaks even on goods and has our mind. So like you're interacting with it frequently with a low margin business. Profits are really in the ad business and then cloud with AWS. I think like something like a third of their profits come from AWS, even though it's a fraction of the revenue.
They should spin it out and get on.
I could see that happening.
No way.
Why
Why
not?
would they give up the growth engine? Like,
well, you could raise a lot of money from it and potentially tap into some more
unlock
valuation.
shareholder value. Yeah.
Right.
I mean, I don't know why I have to be the bear tonight, but I don't like Amazon's e-commerce.
It's low. Yeah. It strikes me. I don't know. Costco's the right comp, but it's a lot like Alibaba, but in a more mature state.
You see this right here? You guys see this? This Energizer USB backup. Okay. The other night around 8 p.m., I went to Amazon and I want to order these. And you know what I did? I went and looked at the reviews. Every single product I looked at, the top review was like 1 star and said, do not buy this. And I struggle because of these reviews. I don't know what to buy. And so then I went to Best Buy. I'm dead serious. A Best Buy, a brand I could trust. I know that if I buy something that they validate, it's legit. So I buy it. And you know what happens? It comes to my house the next morning at 11 a.m. for no extra fee. And so my point is, I think these companies like Target, Best Buy, they've caught up and or catching up. These companies like Target and Best Buy, they've caught up and are catching up to e-commerce, and they know how to do e-commerce now. And they also have that brand trust, which I don't have with Amazon. So as a shareholder, if I was a shareholder, I'd be like, let's just dump it. Let's do AWS to the moon and spin it off. But of course, they're not going to do that. But moats, I think people are overestimating their ability to look at moats, and people are kind of lazy about moats, I think.
It's a race to the bottom. It's a race to the bottom, though. It's one of those like low cost moats, in that if they can get their shipping empire at such a level that it's just impossible for anyone but the biggest giantest players to compete with, 1 day or eventually, who knows, same day shipping sort of thing.
But with people like Shipt and the other app companies, anybody with real estate kind of becomes same day shipping.
But you don't get the same economies of scale with something like that. When you own all of your warehouses across the country, multiple in a town, you have so much more efficiency. Because Amazon runs an
Yeah.
efficient operation for sure, even with the huge amounts of returns they take in, which in that sense, it's kind of like the Costco model where they just take returns, no question asked, pretty much. It's similar in that sense. I wonder if they'll keep doing that long term.
If I was to buy them, I'd be asking myself, can we do AWS again? Can we pull a rabbit out of a hat one more time? And that goes back to this private equity thing. Like, I have no idea. So, so pass.
Sure. I think at current valuations, it's a pretty fair take. They need some serious growth, and who knows where that's really coming from. And maybe it's from the existing business, but you need to really kick it into, or keep it in the crazy high gear they've had it at for a while now.
Bruce's comment makes me think of Nick Sleep, because Amazon, Costco, Berkshire, he's probably like kicking all our asses, like when it comes to performance.
Oh yeah.
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 And
it's hard.
Asus.
The hard part is finding the Amazons 15 years ago, where you're like, yes, I know where they're going to be 15 years from now. In hindsight, it's easy to say, but man, it's maybe it would have been easy. I don't know. I wasn't looking at the time.
Maybe 15 years from now, we'll be saying, well, we should have just bought Amazon.
That would be something.
When it's like a $10 trillion company?
Yeah, right.
Exactly.
It's going to replace all the logistics infrastructure in the United States. They're going to have
in the world,
own a railroad. They're going to own
on Mars
every trucking route. Yeah, exactly.
And drones.
2 months shipping to Mars.
You guys, I got to tell you something. I got a new iPhone because I'm an Apple fan, and Verizon shipped it, and it is such a cluster. Like, they had the wrong address on there.
Verizon's a mess. I left Verizon.
Verizon pisses me off.
I left Verizon like, screw this.
But what
sucks.
I'm saying is, I wish Verizon could have just hopped onto Amazon's logistics network, and it would have been so much smoother. I think Amazon is going to do very well moving forward.
I'm very happily.
That's your best
Verizon
content, Brad. Your best content is consumer complaints on video. You've done it before on your channel. It got a big reaction in the comments. I forget what it was, but it was something, and you were just like, "How could they be this bad?" And,
Yeah, I don't remember. I don't even remember what that was about, but good. I'm glad you guys enjoy it.
Speaking of Apple, though,
that's a moat, by the way. That's a real moat.
They had some stellar earnings again.
Of course,
constantly every quarter is just like, how much better could they get? And they just keep getting better.
number one phone in China.
Wow.
Back to being number one. Yeah.
Is that right? That's surprising.
They've got the number one market share in China. There was this other company in China that was coming up on their heels with what some people thought was better technology for a cheaper price, and then they got sanctioned by the United States of America. And that company is not able to make as good phones anymore.
Huawei, right?
I think so, yeah.
Trailing 12 months revenue of almost $400 billion. Crazy. Just like mind-boggling numbers, and they just keep getting higher.
Because that's a moat. That's a real moat.
Right. And what was it? I think they have like 90 billion or something in free cash flow last year. Yeah, or 100 billion. Excuse me. just continue to march forward.
You guys,
this kind of goes back to the.
Go ahead.
Sorry, I was going to go back to Bruce's earlier comment about the mind share. I think Apple has such an entrenched position in that respect that that type of emotional moat is pretty hard to dig out.
And physical.
Tim, Apple is doing a good job. Yeah.
I've avoided it to this point. I'm still an Android man. I have a Google. I have the a Google Pixel phone.
You're the one
with Google. I actually have Google. This is the Pixel 4a. I had the OG Pixel 1 a while ago, but I got rid of it. And I've had this one for like a year now, and it's great.
I just got the Pixel 6. They're good phones.
Yeah, they're great phones because I think this They bought HTC a while back. For anyone who cares about Android history, they bought HTC. Google did, and then basically rebranded HTC into the Pixel line. And
the
seems like
Nexus 6 was a great phone also.
Mhm.
The one they had before
Yeah.
the Pixel line. Yeah.
Anyways, how about one
So I'm
more?
guessing everyone else has iPhones here. CJ? iPhone,
Oh yeah,
Android?
you don't want to see the collection of Apple products I have.
CJ, I just traded in a bunch of Apple products, old phones and laptops and all that back to Apple through their online trading thing. I had, this is like book value, guys. This is balance sheets. I had $2,000 of value sitting in my office of Apple products, like super old products that they paid me for, and they gave me Apple gift cards for. I turned it into $2,000.
Wow.
So check their trade-in, CJ, if you're not using some of that stuff.
What a return! Yeah, I'm awaiting a return box actually. So
Nice.
I'm an Apple fanboy. So.
Seems like once you're in the ecosystem, there's no escape. And
It
it's
is
just,
sticky. It's very sticky.
yeah.
And you don't want
Right.
to escape. You want to go deeper. That's the
Right.
beautiful thing
Absolutely
about
not.
it.
It's not a prison. It's a wonderland.
What you
That-
really
Jackie,
want is to
every
be a shareholder. That's what you really want.
Right.
One more, Jack. What do you see here?
I see a good question about what are you reading from Jesse.
Yeah,
at
I like that one.
10:15
Why don't we?
PM Central.
Can we table that? Let's get one more stock because I want to make sure we hit all the ones in the title because that would be.
Right. What did you put up there?
Did I mention Spotify?
No.
Or no. No.
Nope.
So I had PayPal, Amazon, Facebook.
We have to have Frank here when talking about Spotify. He's been like a Spotify fanboy.
Yeah, he's in on it.
Who's this?
Let me.
Who's
A
no?
little-
I
a
didn't.
little,
I literally didn't hear you. I did not hear
Frank.
A little
Okay,
channel called
gotcha.
Investing with.
No,
It's
I
not
didn't.
called that anymore.
you. Frank Tabor.
Someone
I
seeking
did
value.
not hear.
Frank Tom.
I did not hear.
Right,
I did
I'm
not
opening
hear
up the
you.
title because I
Swear.
can't see it on StreamYard. So let's see. Facebook, Amazon, yeah, Spotify, Spotify, PayPal, and more. So a brief look at Spotify, maybe, because they got hammered on earnings too.
Spotify's operating income is $100 million in the last 12 months, according to what I'm looking at online. Operating income $100 million, I think, and their market cap is $37 billion. So
Really, only 100?
I don't know what do you do with that? Like, who's buying?
How do you justify? I get the growth, but like how much growth?
It's actually double that. It's about 200 million in the last year. But yeah, that's
Okay.
But that's crazy.
Yeah, the stock hasn't done much since it IPO'd almost 4 years ago, to be honest.
It went on a roller coaster. Here, I got the all-time view up right now. So this is back to 2018.
6% CAGR.
And then year to date, down 25% to kick off the year. And down 45% over the last 52 weeks. So it's been a rough ride recently. But
Do you guys subscribe or listen to even listen?
Nope.
I occasionally
Apple
listen.
Music.
Like I'll pull up if there's a particular episode of like Joe Rogan I want to listen to. It's pretty much the only time.
Get me to download the app for Joe Rogan, but I'm not a paid subscriber.
Yeah, same here.
What do you guys think about those ads?
I used Spotify actually for my I used my free trial for my wedding playlist. I put together so this was back in 2019. That's the only time I was like, this is actually really nice. So you can pull up basically whatever song you want. So I made like a dinner and then like the dancing playlist, and it was great. I just gave it to the DJ, let him play it. But otherwise, I have not subscribed since then. Because YouTube has all the music I could ever want, right?
YouTube, Apple Music. So I like Value Line, guys. I like Value Line. That's where I go for my information. And I'm just looking on there. It says 2022 cash flow per share 5 cents, Capital spend per share, 75 cents. It projects out to like 24 to 26 in a few years. Cash flow $1.60, so up a lot, but capital spend of $1, that's free cash flow of 60 cents a share
on $174 stock.
What's the network effect of a business that has mostly the same content as every other platform that provides the same service? That's what I'm getting hung up with on Spotify versus say Apple Music or something.
I know they're leaning into like the exclusivity of something like Joe Rogan. That's why they signed him.
How's that working out? Sorry.
I know it's causing some ripples for sure, but I don't know if that's the model they're going for. Probably not, because that would get real expensive real fast.
Yeah, basically
more than
signing
ripples, I
content
think.
creators or something.
Yeah,
I need to reread.
we need Frank.
thread.
Frank's our representative, our represent bull of Spotify. It seems.
Well, I think Tom is a bit bullish on it as well, if I recall.
Because they definitely have something going in the podcast space in particular,
Right.
and in music as well. Though they definitely have a lot less control over that. I would say compared to podcasting, given that it's really they're at the mercy of all the big music producers, as opposed to podcasters where they might have more kind of one-to-one individual relationships. But yeah. But I think what Jason's summary, the value line summary, probably says more than I could say.
Yeah, that would be a pass for me.
I'd love to hear Charlie Munger's words when he comes across that value line. That could be a video for you, Jack, with your funny videos with the bathrobes.
With your
and all
robe.
that.
Fireside finance. I skipped last week. I need to make one this weekend, but no promises.
Okay,
but I'll
Jack,
have one soon.
what were in the titles here? Facebook, Amazon. So if you guys had to
We covered
buy
them
one
all.
company today and hold it forever, which one would you do? I would do.
At today's prices.
I would do. Hate to say.
Oh,
it, I
you
would
just
do
boxed yourself
Amazon.
in, didn't you? You boxed
No,
yourself in.
I think you go. I think you go Amazon. What do you guys do?
I think it's between Amazon and Facebook, but given current valuations, I'd go with Facebook. At least that's my take. Because PayPal would be, I could rank order them. Let's see, we got Facebook, Amazon, PayPal,
Spotify.
and yeah, Spotify. Probably in that order at today's prices, though. I mean, I really would only care for Facebook at these prices. But that's
What
just
about
me.
you, Karan?
Can we add in process also?
Yeah, right.
Hey, Karan, that's the other 50%.
Yeah, if I've got half in process, then I can pick any. Like, doesn't matter. Everything can go to zero. Process will carry the portfolio.
That's some bullishness right there.
I like hearing that.
If I had to fall asleep and never look at my portfolio again, then I think the clear choice is Amazon for me. Facebook is a situation that I think the price to opportunity / risk profile is the best for me right now. But I don't think that's a buy and close your eyes for the next 10-year type of situation. So
That's fair.
and then PayPal
Brad,
and then Spotify.
What do you buy?
Yeah, current prices, I'd have to really take a close look between Amazon and PayPal because
I'm
Yeah,
tempted on
okay, so-
PayPal too.
yeah,
I like PayPal. Seems like a little money machine.
right.
You're paying for it.
You're really paying high value. for
Yeah.
it.
It's an expensive money
Like,
machine,
surely
but
paying
indeed
for
it is a money machine.
Yeah.
All right. Any last thoughts about the question about books, right? Where was that? Give me a timestamp and I'll pull it up.
10:50, 10.
It was Jesse's question, right?
Yeah,
Yeah, there he is. Our man
Guys, we
Jesse.
should give Jesse a shout out. I don't know why he is like still under 1,000 subscribers. Like, he needs. Yeah, he's still under 1,000.
Yeah, everyone, please go check out Jesse. He has some good content. Good, honest man.
Jesse's he's gonna ride that Lee Lu wave into the sunset and be over 1,000 in no time.
Yeah. Anyways, so to Jesse's question, what are we reading?
What are you guys reading?
I don't have it on my desk. I have it downstairs, but Guns, Germs, and Steel. I'm like halfway
All right.
through. Yeah. I'm halfway through that. Yeah.
What's the takeaway so far, Jack? Why do people talk about that book so much? I've never read it.
Well, it's kind of it's one of the more like momentous macro history sort of books. And the general question to the title is trying to figure out why, when like the Europeans came over and colonized the New World and decimated the population essentially with guns, germs, and steels, what led up to the Europeans being the ones with guns, germs, and steel versus the Native Americans? What caused that divergence to happen? And he looks at a bunch of different factors, and it's pretty interesting. It's a very broad long-term history, and I'm into history, so I enjoy it. And a good amount on like human nature as well too.
It only covers about 11,000 years of human history. So I don't know.
Since civilization, basically. It does a very quick overview of pre-civilization history. Just to give some context, but yes, indeed, it's almost entirely post-civilization.
It's also the first book on Li Lu's recommended reading list. So
I had been wanting to read it as a history major. Like it seems like it'd be required reading, but I never got around to it. So
yeah,
I'm finally doing it now.
It's well worthwhile. Well, who else is reading something?
I'm reading this book called Free Capital, which is basically about
free money.
12, yeah, you read this book in but it's about these 12 private investors they're all based in the UK. This is from a while back actually. But it's basically how they all became financially independent to the point where they became private investors and just managed their own money. So it's the different, their backstories, their strategies, what got them there, what they do on a day-to-day basis. It's kind of interesting. Just see what a real successful investor looks like behind the scenes, kind of.
Cool.
So far, so good?
Yeah. There are a few, I mean, not all of them are Warren Buffett style type investors. You know, there's some profiles of a day trader, for instance, but it's all interesting. So,
sure.
Being a day trader as like a job seems stressful. Actually, stressful.
Oh gosh, yeah.
It's probably not for any of us.
It's about reading the markets, Karan. That's how we do it.
I mean,
You have to draw lots of lines on the chart, and then it'll work.
Gut feel. Karan, what are you reading?
I actually listened to a podcast recently. It was the Business Breakdowns podcast about Twitter. It was a good episode. I mean, I sold out of Twitter, but still, like,
cop out podcast. Not reading. He's podcasting.
Yeah, no, I haven't been reading much. Been busy with stuff, so
yeah.
I was kind of just listening to podcasts on the drive. So
that podcast is amazing. They have so many good episodes.
Yes.
The ones on Pinduoduo and Alibaba are really good, I found.
I liked the one on Cardlytics when I was looking into that.
Brad, Jason?
I don't want to follow Brad, so I'm going to go first because
good idea. Yeah,
you're going to have
an
amazing book. But I'm reading The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power.
Nice.
It's the biography of Peter Thiel.
Okay.
And on brand with our PayPal discussion. It came out like in the last few months.
Nice.
Very new, yeah. Fantastic book, super interesting story. And my one takeaway from kind of looking at what he's done with his career is I really like the way he's played everything in his life, social stuff he's done, investing, communication when he does interviews. At least according to this biographer, he paints a narrative of this guy moving the ball forward towards his goals with everything he does in life. Like everything is kind of leading towards the same goals, and he's always on message, and he may be talking about one thing in an interview, but it's talking about that way could help a business that he's in, and building a social network to help his businesses and his goals and work in politics and all that. So that was my big takeaway that I had learned from studying Peter Thiel.
Good deal. Brad?
Well, I think the most recent thing I read was the Baupost 2021 letter. No follow-up questions about that. And Chuck Akre podcast, which Pabrai just recommended. I also watched his Google talk. Those are both fantastic.
I guess we got a new definition of reading in 2022.
I
Listening
read
to
with my
podcasts.
ears.
So we
I
got
always-
four Americans here tonight, Jack. Four
Yes, sir.
Americans. Maybe we got 5. Front row seat. George W. Bush. Picture book, guys.
What?
Wow.
Came in today.
Why?
Came in today. Why is because I love this country and I love the
Okay.
presidency, and I just
appreciate
have
that.
always had a fascination with the presidency, with the White House, with Marine One, with Air Force One, and so I got apparently the photographer for the president, who's ever in office, kind of usually puts out a book. So I got one on Bush, Obama, and Trump, and they've come in from Amazon.
I'm replaying how you presented that.
Big
Where
heavy
are
book,
you going with this? Like,
I know. Oh man.
it's
Yeah.
funny. It's a picture book. Like, I mean, it kind of seems so apt.
Where else
Well, we
can you
know
get
how
stuff like
Karan
this, guy?
feels about it, I guess.
Oh, I love this, Jason. Jason, you're one of a kind.
Karan, do you
In-
want
in
me
the
to
best
send
way.
this to you when I'm done? So you can study our.
Sure.
one of our
I've actually
presidents?
got my copy on the way. Like, I ordered it.
Okay,
But I
good.
think Verizon kind of like
Yeah.
is handling the shipping. So
Good. W.
yeah. So
Oh, this is a great spot to wrap up.
Good.
Man, the chat was lively today, but we're already at an hour and a half, and I want to get to bed. I'm sure you two do. You two, Jason and CJ, we're all Central Time, and this has been great. This has been like a crazy week, like we were saying, and lots of good stuff to talk about. Plenty more we could have talked about. So thanks for sticking with us regardless. If you guys like this sort of content and you're not already subscribed, please do. We put out a new video every single week around this time, 9:30 p.m. Central Time for us US folks, wherever that is, everywhere else in the world with our very worldwide audience. Yeah, I got nothing else. Smash the like button. Check out the stuff in the description below. We got a Discord down there too. Yeah. Till next time, everyone.
CJ, don't leave me. It was you and me. Everyone else goes down. It's you and me.